Hi, this is Randy Finney with Right Side of the Chart, and this is a morning session update for Monday, September 9th, 2019. I want to go through not all the charts I'm watching, but those that are really interrelated and most of what I'm trading and watching now, which is, of course, the stock indexes, precious metals, which I continue to use as hedges to my index shorts, as well as treasury bonds. So I'm going to go over those. Crude oil, too. We had a couple questions in the trading room on crude oil. Remember, crude is, at most points in time, and it has been lately, highly correlated to the stock market. So if stocks go up, crude's going to go up, and vice versa. So I'll get to that also, since we've had quite a few questions there, and maybe natural gas, time permitting. Start out with the broad markets. I did an update today. I'm not going to get into a lot of detail here. To me, it's a matter of picking up nickels in front of a steamroller. Maybe I'm wrong, but I still think the breakout that we had last week will end up failing. Pretty big resistance there at about 3,000 on ES. That's what I'm starting out here. Guys, I'm going to use the futures charts. Time permitting, I'll go to the index ETFs. I am aware most of you, probably the majority, trade the index ETFs. But the futures paint a much better picture. They give me better visibility. There's a lot of trend lines, technical developments, divergences, trend lines, support and resistance levels that you can pick up on the futures that don't show well on SPY, because you have virtually nearly 24-hour round-the-clock trading on the futures, whereas you have 6.5 hours of trading on SPY and QQQ. So the levels, you can correlate these levels, on SPY and QQQ. For example, the breakout, here's the ES, the top of the range, the August trading range, and it's a 29.44, give or take. And you can pull a SPY chart, and you're going to see the same highs that occurred during the day on each of those three major reaction highs, or actually more than three. All right, to just sum it up in a nutshell, as I said, I think the upside is limited before the next pullback, next correction. It might be a small one, could be a big one. For example, I have divergence lines like this, meaning right there, or, well, here, I'll take this line. So you can draw, so we technically have divergence. In fact, we had it here the other day, and we have it here. This would kind of fit well, because I'd have what I call clean divergence. It's just me. There's nothing, I don't think, in the textbooks called clean divergence. But you can see when I pull the lines here, you have very little separation on this most recent divergent high. This is just two consecutive divergent highs right here. We had a divergence right here, but it's continued, so we have a separate divergence line. So there was DH1 right here. DH2 is still building. So what I'm talking about, clean divergence, is separation in the on the both indicators, the RSI and the PPO. So down here on the bottom we have the PPO. See here you have these distinct peaks and a trough between. Peak, peak, trough. That's clean separation on the lines, clean divergence. You can see it there, nice troughs. Whereas right here it's mostly flattish lines. Sometimes these do play out. And so, they are divergences. But if we were to do something like this, if I lift this line up and like this, or let's just say, keep it simple. Here, I'll do this, delete that trend line. Just take this one here. This is our divergence line where it started back here, and drag it out. These charts are a little tough to work with. There you go. Drag it out and lift this one up a little bit on the RSI, and there it is. So we'll draw it out for you. And that would look something like this. Have the S&P coming on up here at about that 3,000 level, because it's also right now in no man's land. By no man's land, I mean smack between support right here. I have 29.74, little support shelf right there, and resistance. So a drift up to that level would look something like this. You'd bring the RSI back up here if we rallied up, and you'd bring the PPO back up here with that nice separation. That's just one potential scenario, just something to watch for if it happens, if we move up there and then we start to reverse, then look for a bearish crossover on the PPO at a lower level, to confirm that divergence. Right now it's potential divergence, and actually we just had a bearish cross, but again a little bit sloppy. So the point is, if we reverse now, it would be the same divergences that are in place now playing out, and if we go a little higher, we just simply extend the divergences. And like I said this morning, I think coin toss odds for me, that's 50-50 whether we do that or not. Almost leaning that way, but we'll see. All right, so that's that. Let's not read too much into it. My near term, if you ask me where we're going, actually, I'll give you a level. I showed there was a day trading op I posted in the trading room earlier today. I'll show you that in just a second. There it is on NQ. NQ actually is interesting because we have the same story. We could push up a little higher. Remember, I started out with ES. Those were the S&P 500 futures. NQ, you have a pretty well-defined now resistance level right here. I'll give you that number in a second, but you can just see it's all these recent highs we've been pushing against, and we're in this very tight trading range. We're coiling here, so this is going to go one way or the other sooner or later. These divergences say, we could fail now because technically it's divergence. If you're making equal highs in prices, you don't have to have higher highs. You can have equal highs but lower lows on the indicators. So there is negative divergence, but it would just be a little cleaner to get a pop here, clear out a little bit of last remaining short interest. I mean, not literally all of it, but some more of it. Run on up there because again we have a resistance right there about 79.25. You can look back and see it a little bit better when I go back here. There's that lot of reactions on that line at 79.25, and so the upside is minimal. To me it's about 0.5% or so above today's highs if those levels are popped. And if they do, then you'd have that nice clean divergence right here. So like I said, I'm almost leaning that way. I'd put about 50-50. I'd like to see it because I have a little, I'm actually profiting more when the metals and treasury bonds are dropping lately. I guess I'm a little bit overhedged on those. They seem to, put out outsized gains in my account the days when equities are rallying, because that's taken the flight to safety bit away from those others. But either way, I'll take it for however it comes, and then I'll decide whether to remove those hedges or what else to do here with the index shorts. So that's it. And then intraday, watch that level. Here, let me show you something on the. Let me zoom in on a different chart here. Okay, this is the one I posted in the trading room for a day trading op when we were starting to fall. And I pointed out that same level, I showed you this level last week, 78.40 on NQ. It's a minor support level. You can see a reaction here from below. We broke above it. We had an impulsive move that helped to validate that level. It was a reaction high, was taken out, and then we pulled back, tested, and we came in again. Now, if you're going to go long at, the lines at, in this case 70, there's no 78.40, 38. NQ trades in quarter point increments. This, a lot of charting programs, I don't know why they don't snap to the nearest quarter point. But either way, call that 74.50 if you round it off. And if all eyes are looking at that, you want to come in a little shy, which has happened. So far we reversed just shy of that. And I posted this as a day trading bounce trade op where you go long here. And so far it's played out. Now we have resistance. You can target the top of the trading range. I originally showed an arrow coming all the way up here to backtest this trend line that was broken. But you can see again, this is the level to watch. So if you took it there this morning, a little above 78.40, 50 or so, where we reversed, that would be a natural target, the top of the range. And you could try to reverse again, or if you break above the range, that would certainly be a buy signal. Might give you that pop that I just showed you, about another 0.5% above today's highs. And again, for day trade, 0.5% doesn't sound like much, and it's not unless you're day trading, because then you take a oversized position, whether you're using QQQ, TQQQ, the leveraged, or SQQQ, NQ E-minis. Of course, they're highly leveraged too. And then don't forget, guys, if you're intrigued about the futures, but you don't have the capital, because each NQ contract is probably 150,000 or so, 160,000 represents the new micro mini E-minis. That's MNQ. Just put a letter M in front of the NQ. On your, if your broker has futures trading, and they trade, it's the exact same chart that I'm looking at here. They trade at the exact same levels. They just use a lower leverage factor, so you don't have to, put in, 160,000 per contract if that's above your, comfort level or capital requirements, or account balance, I should. And RTY, had a request recently, keeping more updates on the small caps. RTY did break out of the downtrend line here, and that happened last week. We broke out. And you can see we had a divergent high there at that point. You see the negative divergence, and it's simply we're now making an equal high. Any marginal new high at this point, if we go a little higher, will still be a divergent high. You can see the divergence still very much intact, simply extending, and that tends to happen. Here you had a divergence right there. Oh, actually, you had a nice correction. You had divergence on all the indicators down here, and then you pushed up, made another marginal new divergent high, and then another correction. So either way, to me, again, as of now, it looks like the upside's limited. There is quite a bit. This was a resistance zone, so if small caps can pop this, they might run that high. Not sure if the divergence would still be intact there, but there's pretty big resistance there at 1540, 750 or so. So that's what the small caps look like right now, RTY. But again, it's these divergences that say the upside right now, the momentum's there, but the upside's probably limited before a tradable correction or pullback, which could be more. And then going back to NQ, I know I told you it would be a quick update, but again, if these smaller divergences play out here, what it'll probably do is bring us in for a back test of those that August trading range, and a lot of eyes will be there. You have two camps. You have those that are bullish, they're going to want to buy a back test, and you're going to have those that are bearish looking for a failed breakout. And we'll see what happens. You guys know which way I think it's going to go, but of course, if it doesn't, then we adjust and adapt accordingly. Okay, that's called the risk-on trade. Equities, stocks are what they call risk-on assets. When it's risk-on, you're buying tech, you're buying stocks, you're buying other things like that. Risk-off assets are the treasury bonds, gold, and things like that. So it's not by any means coincidence that stocks have rallied the last week or so, and treasury bonds, gold, everything else is falling. And more importantly, it was you have that relationship, which it was ignored for a while, but this time it was just too good to ignore, too strong to ignore, because we had very clear technicals. In other words, even though the treasury bonds have been a very strong trend, they still behave well to the technicals. This is a 60-minute chart. So back here, early August, we had a divergence. Point out at the time we had a correction. Then we had this uptrend line here. We had another divergent high recently. And the divergences so far are playing out. And these same levels I highlighted last week right here. Very good support shelf. Look at all the reactions there on 164, 120. We hit it. We hit the 163.070 support 2 times. We bounced right up there. That gave you another objective long entry. If you didn't get a short on the divergent highs, if you weren't hedging up here, if you didn't take the breakdown of the trend line / wedge, you had two opportunities actually on a bounce back to that 164 level. Again, very well-defined support. Support once broken becomes resistance. So we bounced between there a couple days, and we broke 163.070 today, which opens the door for a move down here to that next support, about 162.065. That would align with the scenario that I have of a little more upside, about 0.5% or so from today's highs in the equity markets. That would bring treasuries down here, and again, not by coincidence, if that happens, you're going to have positive divergence. Remember, on the stock market, I showed you we'd have, in fact, we already have positive divergence, just like the stock market. And that's why I'm saying we could reverse any time now in both the stock market, meaning going down, and then treasuries going up. However, usually once you take out a support level like this, you're going to come down to the next support level, and that would again align almost perfectly with a little more upside in equity markets. That would allow me at this point, I would be, for example, probably reversing my shorts on CB, going long there. Also maybe especially in the active trading account, adding to some shorts in the indexes, the stock indexes. So these are potential scenarios. Now, since there's divergence, as I said, maybe we reverse before then, so we have to be on the lookout for that. What would be a sign? Well, for treasuries would be a recovery, a solid recovery back above 163.70. That might prove to be a failed false breakdown there, aka bear trap. So if we shot back above there, maybe we run back and make another run at 164, 120. So there it is. So the divergences tell me at the very least, if you're not short treasury bonds yet, you might not want to be shorting now. There might not be a lot of meat on the bone before the next tradable bounce here. Also, before I get off this, keep in mind that the magnitude of each chart pattern, in other words, this wedge, these divergences, which spanned quite a while, a couple weeks or so, are much larger than this smaller divergence. So what that tells me is this breakdown, this was probably be the first leg down, maybe a kickback rally, and then another leg down. So I'm not looking for a huge rally. It is possible, the bid has been relentless lately, up until last week or so under treasuries. But again, that's kind of what I'm looking at, is maybe just a kickback rally. Who knows? Maybe it goes a little more back test that trend line and then more downside. Although when I look at that, to think that treasuries might do this, another bigger leg down, tells me, well, that's probably not going to happen if the stock market fails the recent breakout and then heads lower, much lower, because you're probably going to have treasuries rally. So I'm trying to stay on my toes here, just really focus on these near-term charts and take it kind of one day at a time here, if that makes sense to you, and see which way looks like the equity markets are going to go, especially that breakout that we had last week in the stock indexes. That's probably the most important thing to watch right now. Okay, ZN, these are your 10-year. The ZB were their 30-year bonds. ZB tracks TLT if you're an ETF trader. I gave you that chart. I just put them up on the front page with some levels to watch. TBT is the two-time inverse or short 30-year long bond. And so you can also trade, IEF, I believe, is the 10-year Treasury bond ETF. And ZN is these are the futures for the 10-year US Treasury bonds. And so these also look to me to have a little more downside, which would again align with a little more upside in the equity markets. So you had this trend line here, and again, these these things trade. It's treasury bonds have nothing to do with stocks, other than they tend to move inversely most of the time. But it trades well to the technical. Little triangle pattern there. You had divergent high right here, right? See it? Divergent high number 1. This is what I talk about often, how divergences can be consecutive divergences or expand, and you had a pretty sharp correction, and we pushed up, and it was simply an extension of those existing divergences, another correction. So that was it, and those divergences were over. Then we started forming an uptrend line right here. You can see this uptrend line bounced off there, had a rally, put in a divergent high right here, and so far there's a correction. So this is a lot of stuff on here, but it all kind of plays out that this is a bigger, more important uptrend line right there. Well, wedging type pattern at the top, breakdown back test. That was your objective shorting up there. Then you broke support here. Then you broke this support today, and that's where we're at now. So, and we also took out this uptrend line right here. So we're below. We took out 2 support levels today, which is why I favor more downside to this next support here, and that's comparable to that level I showed you on ZB, where if it gets here, now I'm not trading ZN, I have just ZB, but if I had ZN as well, I'd probably be covering right there, maybe even reversing, especially if I could, at the time it looked like the equity market was going to reverse and move down, because if stocks start to fall again, you'll probably see more money come back into treasuries. So, and there's, just like ZB, you have potential, you have divergence right now. However, it's potential divergence. Why? I call this potential because the PPO is a momentum indicator, and it's pointed straight down. It hasn't crossed back up yet. If it crosses up, it would be confirmed if we get a bullish crossover. So that's the outlook for treasuries. And again, I shared these charts on the front page. TLT, if the market's going to go to new highs and beyond, TLT is probably going to break down and come all the way back here to about at least 138. That's longer term. That's a daily chart. 60-minute chart, again, I gave you levels on that today. These are nearby support levels, and this one here about 142.18 would mesh with a little more downside in treasury bonds before a reversal. So if you're using TLT or even TBT, which I mentioned, maybe a little more upside, possibly to 25.30. Again, these levels aren't they don't have as many reactions. So it's prefer to go off the futures charts and trying to identify the pivot points, the reversals. And onto the precious metals. I give you updated charts today of all of these, and this is where I see. So it all kind of comes in together, and that's why I like to do these videos. You see how I have just a little more downside now on gold before a very solid resistance level, just like I have a little more upside in equities before resistance, just like I have a little more downside in treasury bonds. So if gold comes down a little bit more, I'll be covering my gold. Probably even reversing, because what would happen most likely, we reverse off these support levels about 1500, go on, we have a small falling wedge here. Remember, it's a small bullish falling wedge right on the heels of a larger bearish rising wedge. So there's a breakdown, so that would probably mean a little kickback rally here, which to take it even another step further, this rally here and then the reversal at the end of this smaller wedge rally would probably coincide with somewhere in here with a back test of the top of the recent trading ranges in the stock market we broke out of. So it all kind of fits in. Now it's almost too perfect a plan, but it is my current plan. And again, strip out what the equity markets might do. I can just tell you in a vacuum, this is very solid support on gold. If it just broke through there like it wasn't even there, that would be quite bearish. Anything is possible, but again, I look at the charts here, and I would say right now there's I put a pretty good odds, well over 50%, that will come in here, even if they try to run, stop, clear, and move, a little fake out move, suck in some more, late coming shorts that should have been shorting here, not here. Doesn't matter. So I would give it a little room for a fake out maneuver, and I could see, like I said, this nice clean shorter term bullish falling wedge. You can see how the divergences would look if we have a little more downside in gold. Boom, there it is. So I'm getting ready to cover and reverse and go long the precious metals for the first time in a while since up here. That's gold. We'll look at the other ones for you real quick. Silver, same story. Birds of a feather flock together. So both, been trading highly correlated. There's your wedge. There's a little more downside, 1790, 1791, call it, all the way possibly down here to 17367. I'll call that more of a support zone. Work our way down within the wedge. If we do, we're just going to extend the divergence that's already forming now. Look like that, and then boom, breakout. I'll cover my, reverse my silver shorts into longs, maybe try to game a bounce there, and then probably we'll see, maybe get back short again. What's nice too, if we get that little more downside in silver, this is a daily chart. I was showing you, we were working off the 60-minute chart so far, but look here on the daily chart, nice clean up trend line right there. Boom, we'd hit that trend line right around the same time, and that's more of a reason to step in and go long silver and cover shorts. And again, with the stop somewhat below in case, we just blast on right through there and keep going. Probably maybe give it on a daily close, although silver can move big. You just have to kind of be flexible and, look at everything. Look at, what's the dollar doing, what's gold doing, what's the stock market doing, all that at the time, then to decide, if we break there, where you want to pull the plug on a long trade if you do go long on that trend line. Bitcoin, we can put this one in the risk-off asset class because it is, it's a proxy. I think a lot of people, or actually I should say, I know a lot of people that they're bullish on Bitcoin, or at least buying it, are doing so as an alternative to the, other global currencies, the dollar, the euro, the yen, everything else, with global central banks just continuing to print money, and they call it the race to the bottom to devalue your currency. Only reason the dollar's been strong is because everyone else is winning that war so far, by being easier than we are with rates. But there it is. There's that level I showed you, before. Big level, hasn't broken yet. 94.54 BR. By the way, guys, sorry, this is BRR, Bitcoin futures right here. And so we had the falling wedge right there, breakout, hit support. Again, that's the big support level. And we broke out, and then we put in a divergent high. We ran right into, I already had that level there in advance as a potential target, resistance level, 11,157, hit it perfectly while we put in divergent high and have since corrected. So I'll tell you this, Bitcoin trades well to the technicals. I also had this level there. I haven't changed these, I don't believe, since I showed you this chart last. Look where the pullback ended, right at that 10,097 support. So that's what's going on with Bitcoin. But again, it's not, you can trade off these levels. I'm waiting to see if this level goes for a longer term sell signal. Nat gas, only because I keep getting a lot of questions. I haven't traded for a while. I did take a shot at it today. I know what I call a pot shot trade. I don't see any solid resistance, and as I said, definitely no sell signals yet. But we do have some divergence here. It's getting quite extended, overbought, and somebody asked what a target would be for a short trade. They think it's going to pull back soon. I think a very good target is here, about that 2.44. We'll call it 2.47, 247 level, and uptrend line support. that would be a pullback target. If of course you need it to reverse soon to keep these divergences intact, but either way, look for some type of solid reversal signal. Oh, let's talk about crude. I've got a lot of requests on this too. Okay, crude trades often, and it is lately, with equities. Not always, but often. Trades in line with the equity markets. It's no coincidence. The equity market's been rallying, crude's rallying. Crude is now broken out of that trading range. I mentioned to you recently that we had the trading range in the stock market, the August trading range. Not by coincidence, we also had a trading range in crude at the same time. And it broke out today. Stocks have now, stocks have held up since the breakout. Crude was a little late following them, but only by a couple days here, a day or two. But just like the stock market, I think the upside is going to be limited before a back test. As you can see, we have negative divergence. However, no sell signals, and we just broke out today. And if there's, and I answered this in the trading room. Somebody asked, what do you think on crude? Well, if the stock market has about another 0.5% upside before we get a decent reversal, crude will probably go up 1 to 3% because it's more volatile. If it's even if it's correlated directly with the stock market, in percentage terms, it's going to rise and fall more. So again, a 0.5% move in the stock market upside might correlate to a 1 to 3% rally in crude. But then just watch. Again, if we hit resistance in the markets, or those divergences start playing out before then, and they're still here on crude, then you're going to have a next pullback trade on crude will look something like this. Look for the divergences to be confirmed, and maybe come here and back test the top of that range. Yeah, I'll just rifle through the rest of these. Lumber, this is LB lumber futures price channel breakdown right there. So it looks like near term trend is bearish. I don't have any price targets for that, nor am I trading that one. I just want to point it out as I'm running through these charts of futures. Let me make sure all these have refreshed. Most of these should refresh. Yeah, there it is. Get rid of that quirky candle. Positive divergence still building in corn, but failure to launch. But big bullish divergence, just like we had divergence here. And in fact, the divergences are about equal in scope. I'm referring to these divergences back here, and that was a decent rally. That would have put, that's a nice move in corn futures. So even though you're trading these little bear market rallies, one day one of these bear market rallies will prove to be the beginning of a new uptrend, but we're still in a larger secular bear market in the commodities. But again, you can trade these little, see that small wedge right there? So pop there, probably take us to this downtrend line, maybe that 381 level. And again, divergence is building, no buy signal yet, but one to watch. That's corn, KC, coffee futures. And you could trade corn, by the way, the ETN is CORN. Coffee, which we're looking at here, the futures is JO. You can trade, and this one's trying to pop here. Coffee's been trying to get going. We've had some trades on coffee, and it can run. Broke out of this downtrend line after that divergent low right there. Had a big run, and we caught most of that rip right there as an official trade. And so right now, looking at this downtrend line, which it just broke above, but more important than the downtrend line, in my opinion, is this basing pattern right here, which it's trying to crack above now, but sometimes it'll get going and then it falls back. If it can build on this now, again, it's these divergences that were in place at the recent lows that tell me we'll probably break out of here. And so coffee will look like this, I think. If it starts to run, it'll be pretty quick. It usually moves fast. And I'd say at least up to that 102 level. What does that mean? Well, you're talking, what, 5? That's about a 5% rally, give or take, to there. And then any of these other targets are possible targets as well. So I'll have to look at the longer term charts to see, if I take this one, do I take profits here or do I hold out for some of these? But either way, it looks primed, ready to go for the next run. CC, Cocoa, NIB is the ETN for that. There it is. I showed you this one last week. I showed it breaking out of here. I showed you resistance here at 2278. It pulled back, hit it a couple times. Now it's broken out. So you can look at it this way. That's a pretty good buy signal on Cocoa right here. You have this basing pattern right there. See that? Downtrend line, little wedge, broke out, set up a smaller, back tested the wedge right here for a while, then started to run. But all along, it's been bouncing around in here. Like I like to say, building energy like a coiled spring within a basing range, bottoming pattern, boom, breakout. So not a lot of resistance on this one to probably when we get up here. Let me give that level. If you're a futures trader, again, you can correlate this to the NIB chart. Probably 2444, maybe more. I'd have to zoom out to a longer term chart. I'm right now working off these 60-minute charts. That's it. That's enough. Let's just stop it here. wrap this video up, get it out to you guys, and any updates. Obviously, I'll do an update later today, whether it's a closing market update or if I see anything interesting this afternoon. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.